As of the current trading session on Sunday, January 18, 2026, the market is closed. Datavault Inc., trading under the Nasdaq ticker DVLT, finished its last active session at 0.74 USD, marking a slight upward movement of 0.0051 or 0.69% for the day. While a move of less than a cent might seem like noise in the broader market, for a stock sitting in this price bracket, every fraction of a penny represents a significant shift in sentiment and liquidity. Most people looking at a ticker like this see a low-priced entry into the artificial intelligence space and assume it follows the same trajectory as something like Nvidia stock, or even the recent recovery cycles we have seen with Tesla stock. But the reality of Datavault Inc. is far more complex than a simple AI play label. The expectation among retail traders often centers on the idea that any company with AI in its name will eventually catch a massive wave of institutional buying. The reality, however, is that Datavault is operating in the high-stakes world of data monetization and security, a field where the technical barriers to entry are massive and the competition for actual enterprise contracts is fierce. While the headlines focus on generative models, the real friction is in how that data is stored, protected, and valued, which is exactly where this company tries to position itself. If you are using an individual brokerage account to track these microcap names, you have likely noticed that volume precedes price. In the most recent sessions, DVLT has shown a tightening range, suggesting that a breakout or a breakdown is imminent. When you look at the order flow on an interactive broker's trading platform, you see a battle between small-lot retail buyers and occasional blocks that suggest someone is accumulating a position without wanting to spike the price too early. This is the cat-and-mouse game of small-cap investing. Many investors who use the Robinhood app or similar investing sites for their self-investing needs often get caught in the hype of a single press release, but the institutional activity here tells a more nuanced story. There is a distinct tension between the retail expectation of a to-the-moon scenario and the reality of a company that is still trying to prove its recurring revenue model in a market that is increasingly skeptical of anything that is not yet profitable. The intraday movement of 0.69% reflects a cautious holding pattern. Investors are waiting for a catalyst. Whether you are using Fidelity Wealth Management Services or managing your own Robinhood investments, you have to look at the macroeconomic pressures weighing on small-cap tech. Interest rates, though stabilizing, still make it expensive for companies like Datavault to fund operations without diluting shareholders. This is why the choice of your online investing strategy matters so much. If you are leaning on a SoFi Robo-Advisor or Schwab Intelligent Portfolios, you likely won't see much exposure to a name like this because of its risk profile. But for those doing active investing on a SoFi trading platform, the appeal is the asymmetric upside. If Datavault secures just one major partnership with a firm that handles large-scale datasets, like an Apple stock equivalent in the consumer space, the valuation could shift overnight. Yet the reality remains that they are currently fighting for relevance in a crowded room. Comment below how many shares of Datavault Inc. you currently hold, or if you are waiting for it to cross the $1 mark before entering. To understand why this stock is moving the way it is, we have to look at the broader sector momentum. Recently, we have seen a rotation out of the massive mega-cap names and into smaller, more specialized tech firms. Traders who usually stick to Fidelity ETFs or traditional Fidelity mutual funds are starting to look at individual names again to find alpha. This shift is visible in the trading patterns of DVLT. The volume hasn't reached a fever pitch yet, but the base it is building at 0.74 suggests a level of support that was absent 6 months ago. When you compare this to the volatility of something like Robinhood Crypto or other speculative assets, DVLT feels almost stable, which is a strange thing to say about a penny stock. This stability might be the result of professional traders using an interactive broker's trading platform to set limit orders at these specific psychological levels. They are betting on the data as an asset narrative. The company itself focuses on a proprietary platform designed to quantify the value of data. In an age where companies are being sued for using data to train models without permission, a vault-like system that tracks and monetizes data legally is a strong concept. That is the expectation, that Datavault becomes the gold standard for data accounting. The reality is that implementing such a system requires massive changes to how big corporations handle their internal silos. It's not just a software plug-in, it's a fundamental shift in infrastructure. This is why the stock price is at 0.74 and not $74. The market is pricing in the execution risk. When you use Fidelity Investments or a Fidelity brokerage account to research these filings, you see that the burn rate is the metric to watch. Can they stay solvent long enough to see their technology become the industry standard? Looking at the current market landscape, users of the Robinhood mobile app often favor stocks with high social media engagement, but Datavault has remained relatively under the radar. This can be an advantage for the patient investor. While everyone is chasing the latest gains in Apple stock, we're searching for investment help on how to get into the next big thing. The quiet accumulation in names like DVLT can lead to significant returns if the thesis holds. Online investing is often about finding the gap between what a company is doing today and what it will be required to do tomorrow. If government regulations on AI data usage tighten, Datavault's business model becomes a necessity rather than an option. This is the specific catalyst that could flip the narrative from speculative to essential. Shutterstock, explore. For those using SoFi Active Investing or exploring various investing sites, it is important to realize that the technical setup here is a classic cup and handle formation on the longer-term charts, though the handle is taking quite a while to form. The 0.74 level is a crucial pivot point. A sustained move above 0.80 on high volume would signal that the reality is starting to catch up to the bullish expectations. Conversely, if it drops below 0.65, the narrative of a slow-moving turnaround might be dead, and the reality of a struggling microcap would take over. This is where tools like the interactive broker's fee structure and execution speed become important for day traders looking to scalp these small movements. Every cent matters when your position size is large enough. The business model of Datavault Inc. involves creating a decentralized exchange for data. Think of it as a stock market, but instead of trading shares of companies, you are trading the rights to specific data sets. It's a bold idea. They use distributed ledger technology to ensure that once data is sold or licensed, the transaction is immutable and transparent. This addresses the massive problem of data piracy and unauthorized scraping that is currently plaguing the tech world. This is much more sophisticated than what many other AI stocks are offering. When you look at the offerings in Fidelity IRAs or through a SoFi robo-advisor, you are often getting a broad basket of companies that might only have a tangential connection to this technology. Direct investment in DVLT is a pure bet on the infrastructure of the data economy. In terms of older reports, the company has had its ups and downs with capital raises and leadership changes. Past performance shows a history of volatility that has shaken out many weak hands. Those who bought in during previous hype cycles only to see the price dwindle are the ones currently providing the overhead resistance. They are looking to get out at break-even. However, the newer cohort of investors, many of whom are utilizing Robinhood fractional shares to build positions over time, seem more focused on the long-term viability of the AI data vault concept. This change in the shareholder base is a subtle but important factor in the stock's recent price action. It indicates a move from get-rich-quick speculators to buy-and-hold believers. The macroeconomic environment for 2026 is also playing a role. With inflation concerns lingering, investors are looking for companies that have pricing power or own intellectual property that cannot be easily replicated. Datavault's patents in the data valuation space provide a moat that many of its peers lack. While you might find similar themes in certain Fidelity ETFs or when looking for investment help on specialized platforms, finding an individual brokerage play that is this focused is rare. The risk is high, but the expectation is that the data market will eventually be worth trillions of dollars, and someone has to provide the picks and shovels for that industry. As we look toward the future, the catalysts for DVLT are clear. First, they need to report a narrowing of their net loss in the next quarterly statement. Second, they need to announce a pilot program with a recognizable name in the enterprise space. Even a partnership with a mid-tier firm would be enough to validate the technology in the eyes of the market. Third, the overall sentiment towards small-cap tech needs to remain bullish. If the liquidity provided by platforms like Interactive Brokers and Robinhood continues to flow into these names, we could see a rapid re-rating. The reality of the situation is that Datavault is a high-risk, high-reward play that requires a disciplined approach to position